Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, May 28th, 2025. Hope you're having a fantastical day out there in the interwebs. It's a gloomy day here in Colorado. Apologize for being a little late. Had a meeting in town and did some chores on the way back. So I apologize. It's a little later than normal. But yeah, it is gloomy and rainy. It was beautiful yesterday, but I don't know. It's just the way it is right now. We got rain for the next week or two. And does not excite me, unfortunately. I like the sun. That's why I live in Colorado. Even when it's cold, the sun is out. So not used to it. Well, it's like this every May. So, all right. Well, diving into why you're actually here, markets pulled back as traders brace for the Fed minutes and NVIDIA's earnings drop. But after the bell, NVIDIA didn't disappoint, blowing past expectations despite a looming $8 billion China export hit. Macy's beat forecasts, but trimmed its outlook, and oil ticked up on Chevron export bans and steady OPEC plus output. Volatility's creeping in, and the data deluge is just beginning. So before we break down all the news, I need some help from you. Yes, you. I see you sitting there. Give me some thumbs up, a like, share, subscribe, follow, and press that darn notification bell. All righty, well, let's jump to the markets for today. Dow Jones finished the day down 0.58%, 244 points, closed at 42,098. S&P 500 down 0.56, 32 points, closed at 5888. NASDAQ down 0.51, 98 points, closed at 19,100. The VIX was up 1.85% today. It's at 1931. Canada up 0.06, Brazil down 0.47, and Mexico up 0.24. In Europe, Germany down 0.78, the UK down 0.59, France down 0.49, Netherlands down 0.61, Spain down 0.98. Italy up 0.01, so basically flat. Switzerland down 1.04%, and Portugal down 0.13. Russian exchanges green again today. MOX up 1.77, RTSI up 1.79%. And the overnight markets, the Nikkei in Japan was flat at 0. Australia down 0.13. New Zealand also flat at 0. In China, the Shanghai down 0.02, Shenzhen Component down 0.26, China A50 down 0.03, TJ Shanghai flat at 0, Hang Seng down 0.53, and the Taiwan weighted was down 0.93 when it last closed. All right, so those are the markets. So everybody was, I guess, jittery wanting to see what the Fed minutes are, which we will get to last on our agenda today. So. All right. Well, first up, we got the market recap. S&P 500 falls on U.S.-China trade angst. Ready. U.S. markets declined Wednesday as renewed trade tensions and caution from the Federal Reserve weighed on investor sentiment. The S&P 500 ended lower after reports surfaced that President Donald Trump's administration ordered U.S. chip software companies to halt sales to China. The Financial Times reported that the directive targeting companies like Intel, AMD, and NVIDIA, which all closed lower. The restriction could disrupt semiconductor manufacturing in China and fuel further trade retaliation. Investors were especially focused on NVIDIA, which was set to report quarterly earnings after the close. Expectations were high, with analysts forecasting strong growth in revenue and profit, driven by AI-driven demand from hyperscaler clients. However, concerns lingered over the impact of U.S. export controls on NVIDIA's China business. CEO Jensen Huang recently criticized the policy, calling it a, quote, failure, end quote, and warned it could hinder access to a potential $50 billion Chinese market. On the retail front, Macy's stock rose after beating earnings estimates, though it lowered its full-year outlook due to tariff pressures and softer discretionary spending. Abercrombie & Fitch and Dick's Sporting Goods both beat earnings expectations, with the latter reaffirming strong sales growth. Okta, however, plunged on weak guidance and broader macroeconomic concerns. Meanwhile, the Federal Reserve's May meeting minutes revealed a cautious stance on rate cuts, citing uncertainty around inflation and tariff-related shocks. Minneapolis Fed President Neil Kashkari warned against ignoring the economic risk posed by new trade barriers. Overall, escalating trade tensions, mixed corporate earnings, and monetary policy uncertainty combined to keep pressure on equity markets. With tariffs and tech policy at the forefront, investor attention will remain locked on geopolitical developments and central bank commentary. All right. So again, everyone's kind of on pins and needles, all worried about where things are headed. All right. Next up, got an article here from Zero Hedge. Trump's monetary reset is a gold-backed dollar on the horizon. I'm not opposed to it. So let's see what Mr. Nick Giambruno of the International Man had to say about it. A looming monetary reset is being driven by two powerful forces, the U.S. debt crisis and the Trump administration's belief that the dollar is dangerously overvalued. According to Nick Giambruno via the International Man, devaluation of the dollar is not only inevitable, but, but potentially imminent, with gold likely playing a central role. Interest payments on the federal debt have surpassed even defense spending and continue to grow, making the current fiscal trajectory unsustainable. At the same time, Trump sees the strong dollar as a threat to U.S. exports and manufacturing, viewing devaluation as the only viable way to correct trade imbalances and ease the debt burden without defaulting. Historically, monetary resets have involved revaluing gold and devaluing the dollar. Trump's admiration for gold, evident from his personal history as a gold investor and his acceptance of gold as written in 2011, signals a potential return to a gold-based monetary standard. His Treasury pick, Scott Bessent, also holds a bullish stance on gold, reinforcing this possibility. A potential strategy could involve the U.S. government buying gold on the open market to drive up its price, thereby weakening the dollar. Repegging the dollar to gold at a much higher valuation, say $10,000 or $20,000 per ounce, would not only devalue the dollar, but also strengthen the government's balance sheet by revaluing Fort Knox's reserves, if they're even there at this point. A gold-backed dollar would likely begin with a full audit of U.S. gold reserves and a reassessment of how much of the money supply to back, with central banks globally buying gold at record levels and a notable increase in gold shipments to U.S. vaults. Signs point to a historic monetary shift in the making. For investors, this potential reset presents a unique opportunity. Positioning in gold could be critical as the financial landscape transforms. Well, one thing I do know is that we can't continue to devalue our currency, year after year after year, because eventually, the dollar will be worthless, and the dollar will be worth pennies. And since we're getting rid of the penny, I don't know if you saw that in the news already. All right. Last up, we got the Federal Open Market Committee minutes from May 6th and 7th of this month. So let's go ahead and read through my summary and see what's in there. The May 6-7, 2025 FOMC meeting revealed heightened concerns over inflation and economic uncertainty, largely driven by newly implemented U.S. tariffs and their ripple effects across the global economy. The committee unanimously voted to hold the federal funds rate steady at 4.25 to 4.5, citing ongoing economic strength paired with persistent inflation and labor market resilience. I'm not sure what's really strong about the economy, but I'll go along with whatever they're saying. However, the tone was decidedly cautious, with members acknowledging that uncertainty over trade, fiscal, regulatory, and immigration policies had increased risks to both inflation and employment. Participants reaffirmed the Fed's 2% inflation target and discussed the limitations of flexible average inflation targeting, suggesting a possible shift towards a more robust, flexible inflation targeting model. They emphasized the role of well-anchored inflation expectations in supporting long-term price stability and employment goals. Well, you're not going to have price stability if you keep devaluing the currency. It makes things more expensive, folks. Financial markets experienced notable volatility over the intermeeting period, especially after tariff announcements. Treasury yields steepened, equity markets swung, and credit spreads widened. The dollar depreciated significantly, a reaction market participants attributed to trade policy concerns favoring foreign economic resilience over the U.S. liquidity in key financial markets. Liquidity in key financial markets remained intact, and there were no sign of major disinvestment in U.S. assets, though hedging activity has increased. Economic data showed real GDP contracting slightly in Q1, attributed to a surge in imports ahead of the tariff hikes rather than underlying weakness. Private domestic final purchases remained solid, and labor markets were strong, with stable unemployment at 4.2% and moderating wage growth. Nonetheless, consumer sentiment dropped sharply and business confidence declined, with many firms postponing investment due to policy uncertainty. Inflation remained elevated at 2.3% headline and 2.6% core PCE. Staff projections downgraded GDP growth for 2025 and 26 and raised near-term inflation expectations. Risks to the outlook were seen as tilted towards recession, and persistent inflation remains a key threat. The committee concluded by maintaining current policy while emphasizing vigilance and flexibility in response to evolving risks. So, like I said before they went into the meeting, they're going to sit on their hands. They're going to see what happens, and they're going to, evaluate the data as it comes in. I said that a month ago before the meeting started. So, anyways, all right. Well, that is everything that I had to cover for today. So, where do you want to go if you want to get your financial life back on track? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So, give me a call. I'd be glad to help. All righty. Well, that is all I had to cover for today. So, if anyone needs anything from me, like I said, go to the website. Otherwise, hope you have a great evening, and I'll talk to everyone again next time. Adios.